Support and resistance, one of the most slept on strategies, yet smartest, for me, most profitable strategy, and also one of the most simplest strategies anybody can use to make consistent income in the stock market. Now listen up. Before I even continue with this video, I was informed that I should stop cursing so much and just stop cursing period to make myself a little bit more marketable and be able to reach more people that genuinely want to learn, so they do not have to listen to a young 18-year-old ghetto boy, as those would like to say. Which I don't think I'm that, which I don't feel like I should have to change, but I can't be arrogant and ignorant and, oh, I ain't gonna change for nobody, I'm a 100% forever stay me. I will continue to be me, but I will clear up my language in these videos. Now, after me getting that out the way, in this video I will be telling you guys 3 reasons why you should at least try trading with support and resistance, and how you guys can make consistent income using this strategy just alone, and how to chart support and resistance. The number one reason why I would recommend support and resistance, especially for a beginner trader, is because how easy it is to chart. Support and resistance is known to be one of the most important concepts in technical analysis. Reason number 2, the market is controlled by who we like to refer to as market makers, right? Market makers are usually the big banks, the big hedge funds, and like big institutions basically that have so much capital that they're controlling the market. My whole point in saying this is because some market makers have automated bots that trade using support and resistance lines. If the market makers are the ones who control the direction of the market and control the market, why not use what the market makers are using and think like the market maker? Study shows that only 5% of traders end up coming out profitable. So let's just say there was 100,000 traders, which there's 10 times, probably hundreds of times more than that. Let's just say there was 100,000 traders. Out of that 100,000, only 5,000 of them would end up becoming profitable according to studies. My personal theory is that those 95% of people who are not profitable are having trouble finding profitability within the markets because they aren't thinking like the banks. I know many profitable traders, and one thing all of them have in common is they think like banks. Not exactly like banks, but think about what the banks would do and defend. The banks are making money off of your losses. So out of the rest of the 95,000 out of that 100, all of them are funding that 5% who is profitable. So why would you not want to be in that 5%? You don't want to be in that 95% giving people your money. Every single time you take a loss in the stock market, you're paying for somebody else's bills. Just think of it like that. So be that 5%. Be him. Everybody's journey is different and different strategies work for different people. But what I can say for me is that I had my first profitable month literally just following this strategy that I will show y'all. Once I followed this strategy 100%, technically I didn't need the moving averages and technically I don't need the RSI. I can just go off price action and support and resistance. Even though I still do choose to use those moving averages just for extra confirmation, and use the RSI just to have extra confirmation on whether we're in overbought levels or oversold levels. There's over 1,000 millions of strategies on YouTube, but most of them are typically user created indicators, meaning they're not teaching you a strategy off price action most of the time. Most of the time it's a trading view indicator that somebody else tested or coded that is delayed, because 99% of all indicators are delayed and the market has to make a move before the indicators pick up on what's going on. So which means your goal needs to be learning one profitable strategy, not 1,000, but one, sticking to that one and following every rules required to be profitable with that one strategy. Not using all tens of thousand indicators telling you when to buy and when to sell, because that is just not the best route to go, long term at least. I'm gonna go ahead and show you guys my charts, and actually I'm gonna take off every moving average and I'm gonna close out my indicators and show you guys exactly how I would chart support and resistance. Now, currently, I am on the 1 minute chart. As you can see, I already have 1, 2 support and resistance lines marked. But right now I'm on the 1 minute. But every Sunday, I clear my chart. Today's not Sunday, but I'm gonna just do it for the sake of this video. I clear my chart, I clear out my levels, and I start brand new. But I do not like to start brand new from the 1 minute chart. I like to see the overall picture of where the whole market is heading. I like to have an idea and make my little guesses and my predictions in my head but have a plan for both directions of the market. So instead of me just saying, okay, the market looks bearish, I think I'm going to be bearish for this week, I can have a bearish bias, but I also need to have a plan just in case it doesn't go bearish and it ends up going bullish. You got to know that the market loves to surprise people. Banks, institutions, hedge funds, when they trade, when the market makers are controlling the market, they are trying to think, okay, what are most traders trying to do? In the stock market, whatever comes up has to go down, and whatever goes down has to eventually come up, because institutions, hedge funds, banks, whoever the market maker may be, they need you to lose money. So if they're pushing the market up, the average noob beginner trader is just gonna buy in because they see the market pushing up. They know that. That's what they like to call bull traps and bear traps, which I will have to get into a whole separate video. But the market maker, he keeps on pushing up the market. Obviously, people are going to start getting in calls, buying shares, getting in buy positions on futures, buy positions on forex, whatever you may trade. They know if they keep pushing the market up, the bots, the beginner traders are going to just trade in the direction that the market's already going. So this would be an example right here of how they reversed. We had a big push, consolidation, indicating that we're probably reversing, and we reversed, basically taking the money of all of those people who bought in while we were pushing up. This is just one example out of the thousands that play out every day. The market was pushing up, many people got in, so they started selling. And once they started selling, all the people who were getting in from up here, they lost money, and guess where the money went? To the market maker. Be like the market maker and get in before the moves. Now, like I was saying, sorry if I got off track, I like to start with the daily chart. Now, everybody is different when they do technical analysis, which is basically what we're doing. Technical analysis is just analyzing the market, coming up with a trading plan and just analyzing the market and creating our bias on where we think the market is heading. Sometimes I come in here and just mark support and resistance. Sometimes I come in here and mark trend lines. It all depends on the current market conditions and what I plan on trading this week. I like to start with the daily time frame, which basically just represents every single candle represents what happened on the day. So this candle, we were bearish on Thursday, May 5th, 2022. This candle, we were bearish May 5th, 2022. This candle, you guys get it. You guys get it. And on the 1 minute, every candle represented 1 minute of the day. The reason I went to the daily chart is because I want to see the bigger picture. If we constantly reject an area on the chart on the daily time frame, more than once on the daily time frame, that support or resistance level is way stronger than a level from the 1 minute time frame, the 5 minute time frame, the 30-minute time frame, because it's the daily time frame, which means on the day, buyers or sellers prevented the support or resistance line from being broken. I know all of this may sound confusing, but just keep listening, just keep studying, and eventually everything I'm saying, y'all will come back to this video one day and be like, I know exactly what he's talking about now. But just listen. So, how do you find a support or resistance line? You want to look where price has rejected basically multiple times. Me, because I have been trading with support and resistance for as long as I have been, I already can look at the chart and see without even marking the chart where my support lines are, where my resistance lines are, where the strongest resistance lines are, and where the strongest support lines are. But that just comes with experience. But in the beginning, I recommend that you go on a chart, any charting platform that you may want to use, and mark out the lines in the beginning. Right here, I would consider this resistance. Why do I consider this resistance? Because on Monday, August 15th, we rejected, created a wick above this resistance line. So hold on, let me go ahead and mark the resistance line. So what I would do, basically, if you're on TradingView, Alt H, and boom, you got yourself a line. As you can see, we wicked up, which means price ended up coming up here on the day, but sellers stepped in and closed us below the resistance line. The next day, on Tuesday, August 16th of 2022, buyers pushed the market up again above this resistance line, but did not allow us to close and end the day off above it. They closed below it. Sellers stepped in and we closed below. That's rejection number 2. And confirmation that we were rejecting off of this level and going back in the other direction was this bearish engulfing candle, which you guys will be able to tell what type of candlesticks are what. This is basically a bearish engulfing candle because this was just a big rejection candle indicating that the direction of the market is changing. We were bullish for a couple of days, a couple of weeks, and then boom, we rejected twice, created a little doji, a little mini doji, and then went the other way to the next zone, which I would like to mark at right about here. Why may I have chose this? We would call this zone right here the bottom of a level. You guys, after I chart all of my resistance, support and resistance, you guys will see the market moves in levels. This is just one level. The top of that level is called resistance because, as you can see in the beginning, we're resisting. The bottom line is what we like to refer to as support. You can basically just remind yourself, the bottom, we're using the bottom as support. We're supporting, we're holding up, we're supporting. Resistance, the top, we're smacking off of, we're resisting the top, and we're holding support. Support, resistance. That might be a dumb analogy and way to remember, but that's just the best I can think of coming off the top of my head. Now, as you guys can see, plenty of times in the past we have rejected off of this level. When we were below this level, we would consider this resistance because we were first resisting off of this level. As you can see, on Friday, July 22nd, buyers tried to hold up above the resistance level. We got up above it, but sellers stepped in and pushed us all the way back down and did not let us close above that resistance level. A couple days later, when we did end up closing above that resistance level then turned into support. Let me repeat that again because I know it could sound a little bit confusing in the beginning to a beginner's ears, but let me say that again. Right here, we rejected off of this level, which would at that time be considered resistance. We tried to hold up above it, but sellers stepped in and we closed below it again on the day. The next trading day, which was Monday, July 25th, we kept going down, and then boom, we got a nice bullish candle right here. And then on Thursday, July 28th, so almost a week later, the daily candle, we were able to close above that resistance line. And after we closed above that resistance line, closing meaning we ended the day all above that level. Close meaning wherever we end off for the day. So because this is the daily chart, when this candle closed, this is where we ended off for the day. And we ended off for the day above that resistance line, which is now turning into support because we're now supporting up. And this would be our new resistance. I don't know if I just said that in the most confusing way ever. When I'm editing this video, I hope I don't say it too confusing. I might drop little tips and text chats right here below me if I'm saying something that could sound confusing and I feel like I'm not saying it in a way that can make y'all understand easier. But hopefully y'all are kind of getting the gist of it. So I'm gonna go ahead and speed it up, but I'm gonna just go ahead and mark every resistance, support, and resistance line that I see. And then after I do that, I will teach you guys how people make money trading with these support and resistance lines. As you can see, we rejected here, this was our support, and we ended up going all the way back up to our resistance line, consolidated around our resistance line, and ended up rejecting again and went right back down to support, broke support. That then support turned into resistance. And as you guys can see, all the market does is move in levels. Boom, we're here, we're in a level, we're trading in this level. Then boom, we broke above, started trading in this level. Then boom, we broke below, traded in the level from weeks ago. Boom, broke below that level. Now we're trading in this little level for a couple of days. Well, nah, that's really 2 weeks. And then boom, we broke below that level, started trading in this level, then boom, we broke above that level, started trading in that level, then boom,
we broke below that level and started trading in that level.
And as you guys can see, the levels that I have just marked for the year of 2022 have been respected since 2020. The levels stay the same forever. As you can see, a level that I marked from 2022, from August, ended up being a level back in April, ended up being a level back in March of 2021, and you guys get the gist of what I'm saying. The market is just basically moving in levels. Once you guys learn how to mark levels, how to spot levels, you guys to the moon. I believe in y'all. And by the way, marking support and resistance is the same on the 1 minute chart, on the 5 minute chart. If you're an intraday trader, that is the chart that you want to be marking. Now, I have marked most of the support and resistance lines that I have spotted on the daily chart. Now, let me tell you guys how people make money using these levels. Right now, we're on the daily chart. So we're just gonna, for example, pretend that we are a swing trader right now. right? Say we're a swing trader. If you do not know what a swing trader is, it's anybody who gets into a position with the intent of selling it over 1 or 2 days or even more. An example of that would be someone who gets an expiration date, is someone who gets a call on Apple betting that it's going to go up and the expiration date is for all the way in December, a month from now. And they have the intentions of holding it over one night. That is a swing trader. Swing traders usually swing trade and find their setups on the 4-hour chart or the daily chart. Now, if I were to be a swing trader, right, see us close on the day below or above, I'm gonna just show y'all my personal strategy right now. I'm gonna show you guys on the 1 minute chart what I actually do. But with my support and resistance strategy, it works with any type of traders. This strategy, let me repeat, works with any type of trading. Whether you're trading options, Forex, futures, whatever you're trading, this works. Now, as a swing trader, I'd want to see us hold on the day or on the 4-hour below or above a support or resistance line. My personal strategy, what helps me stay profitable, is waiting for a close above in 1 hour after the market closes. Say we held below this support level right here. If I seen we held below, I would be getting in a position betting that we're going down to the next level, which we can go over here and mark. The last time we were that low was back in July of 2020. And right here, I see that we had a lot of rejections off of this level right here. 1, 2, 3, 4, 5, 6, 7. So I would definitely mark this as a resistance level to know my next price target and know and have an idea of where the market may head next. Going back to over here, I'd wait for a strong close, which means closing on the day below this support level would turn this into resistance, and I would get a put or a sell position betting that we will reach this level right here, which is our next support level. Let me repeat that again just in case it got too confusing. If we closed on the day, meaning the market closed, hypothetically speaking, this probably won't happen because it seems like the buyers are pushing the market back up after we already tried to hold below this resistance line. If we held below, we would also be at yearly lows on the NASDAQ. But let's say it did happen. I'd wait for a close below this level and get in wherever it closed at. If it's at the end of the day and it's like 358, I'm getting in my sell position. Say we're here and it looks like we're finna close and the bulls aren't stepping in, which is the bulls meaning the buyers, and we do close. I would make my stop loss. a little bit above the support line we have just broken, and the only way I would get out of my position is if a candle closed above my stop loss. With swing traders, it's a little bit different. Hopefully you guys are, following along. Now, if we close, I'm automatically assuming that we are going to hit the next level. Right now, you guys can see my risk to reward pretty damn high. Depending on how much money you're putting into this trade, this is the amount of capital that you're risking to make this much money. You're risking way less capital to lose to make way more to gain. Hopefully this video isn't too long. I've been recording for 28 minutes, so maybe not. But let me just go ahead and show you guys my exact strategy and exactly what I do to make money on a daily basis using support and resistance. Now let's get into it. As you can see, there's a lot more going on here because this is the 1 minute chart. So instead of charting my levels on the 1 minute chart, I'm going to go with the 5 minute chart. But I'm going to show you guys how I execute my trades from the 1 minute chart. When you're first beginning learning how to chart support and resistance, I recommend you first chart on the daily chart, because once you get to smaller time frames like the 5 minute and the 1 minute, as you can see, it's a lot more going on and there's a bigger story to tell in the market. But I'm gonna go ahead and mark my levels. It's basically the same thing. Wherever you see price rejecting at is usually resistance. Wherever you see price holding above at is usually support. Now, as you can see, just like on the daily time frame, the market is still moving in levels. Now you're probably like, oh, the market is all one big pattern. Yes, that's exactly what I've been trying to tell y'all. The market is one big ass pattern. There's levels on the 1 minute, levels on the 5 minute, levels on the daily, and they all somehow manage to all be coordinated. all be coordinated. Now, after I chart my levels on the 5 minute, I usually trade from the 1 minute. Now, here's an example of a trade that if I wasn't recording this video right now and trading, I would have made money on. This is literally exactly how I consistently make income out of the market. Exactly. I'm not sugarcoating anything. It's gonna look way simpler over time than anybody else would ever think. People make trading so difficult. It's not. Now look, as you can see, we had a candle close. Let me zoom in because my monitor is big. It might look weird on you guys' screen. Now, right here, you see we closed below a support line. What does this turn this support line into? You're correct. Resistance. As you can see, we retested this level, failed to hold back above, which means we are now trading below the support now turned resistance line. Now this line is resistance. But what I like to look for is a hold below support or a hold above resistance. This hold below support, once I would have seen this candle close below that support level, I would have went in for a put, a sell position, whatever you trade. If you're on Forex, a sell position. If you trade futures, a sell position. Or if you trade options contracts, you would get in puts. So I would have got in where the candle closes. It's smarter to wait for a retest because sometimes you can close below levels and buyers instantly push the price back above with the next candle. Sometimes you will get a retest. As you see here, we retested, tried to see if buyers can hold above. Sellers stepped back in and pushed that motherfucker right back down. Sorry about my language. I said I was gonna stop. So some people like to wait for the retest and drop as extra confirmation. Me, I'm a risky guy. I get in after that candle close, and if I get stopped out, I will not sit there and be like,
bro, what if it goes in the direction that
what if it still gets dozed down, bro? Like, what if I just wait an extra hour? The market will really surprise and humble you and have your ass waiting an extra hour. Instead of following your stop loss, now you're taking an extra loss because you're holding while it goes up. Then it ends up breaking this level and keeps going up. And you got in for puts or a sell position all the way down here. And now the market's going up, eating away your money. You keep telling yourself, it's going to go back down. It's going to go back down. And it doesn't go back down to this level until 2 weeks out from later. The market has a funny way of humbling us. Now, like I was saying, I would make my stop loss a little bit above the support line that we just broke. And if I see a candle close above this now turned resistance line, this is now resistance because we're smacking off of it. We're resisting. If I see a candle close above this line, I'm getting out of my position and I'm just waiting for the next trade opportunity. And I'm taking a way smaller loss. And if that were to happen, you're taking a way smaller loss than your average win. My next level, I don't have charted out all the way until down here. Which is a level that I found on the daily chart. But yeah, I would have made my price target somewhere down here, wherever my next level is, because like I said, the market trades in levels. It trades in zone. This is a zone, this is a zone, this is a zone. On the daily time frame, this is a zone, this is a zone, this is a zone, this is a zone. On the 1 hour time frame, this happened at 3 p.m., this happened at 4 p.m., this happened at 6 p.m. But I am a scalper, meaning I am quickly in and out of trades, which means I am on the 1 minute, sometimes the 5 minute. And look at that, we broke down and ended up dropping a little bit more. We're actually running into very critical support, which means this may be a hard level to break. It's not just going to break easily off one candle like that, because we have been rejecting this level on the daily time frame. Now, like I was saying, I would have waited for that hold below the resistance level and made my price target somewhere down here, which as you guys can see, we practically hit. So basically, we risked almost 1 to 9. Look at this risk to reward. Y'all look at this and say y'all only take high probability trades like this. This right here, when y'all hear me speak on, the market is not a guessing game. It's a high probability game. This right here, ladies and gentlemen, is a high probability trade right here in front of your eyes. Why is it high probability? Because we broke it. We broke a zone. Our stop loss is right here, which means if we see a candle close above here, we're getting out of our position for just a smaller loss compared to what we could possibly make. And look how much you would have made in comparison to how much money you were risking. Now, like I was saying earlier, a lot of people do not have the discipline to get out right here once they see a hold above here. They're gonna think, beginners, the 95% who are not profitable are gonna say, okay, we might just come back down. 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 We might just come back. Instead of taking that small loss and waiting for a new opportunity. Every single trading day, there is over 10 opportunities that you will be able to catch off of support and resistance alone. There's all types of strategy, but off of support and resistance alone, you will see over 20 plus support and resistance plays every single day, where all you have to do is get in at the break of a level and hold until the next zone. Now, with the market, nothing is 100%. No strategy works 100%, which means when you break below, and say for example we close right back above, like right here, we held below this level, as you can see a little bit, we came down a little bit, and then we broke right back above and held above that level and went all the way into the next resistance. Sometimes that happens. Me, if I was actively trading and I seen this trade play out, I would have gotten right here as the candle closed, made my price target this next level, had a tight stop loss, basically a hold above the level we just broke, and I would have got stopped out. But not only would I have got stopped out, I would have got stopped out for way less than I was about to make anyways. And plus, say you take 10 of these a day, and say you make, if you're beginning and you're not trading with as much capital, say you're making $20 per trade, and you take 5 of these a day, 10 of these a day, with the same risk to reward, with the same amount of capital, putting the same amount of money in each and every single trade, and risking the same every single trade. Every trade is going to have a different risk to reward, but these right here are just higher probabilities. That is literally all I do. Now let me show you what I would do if I was looking for a buy position, or what I would do to get into a buy position, or what I would be looking for to get into a buy position. Bull flag formation. A bull flag, you guys will learn more chart patterns as you guys go on and research and study trading more. You guys will understand chart patterns and stuff like bear flags and bull flags. This right here will be a bull flag, basically a formation setting up for us to break out and go bullish. Sometimes we get bear flags, which are formations that are the opposite of this. It would look something like this right here. This would be a bear flag. Little formations like this pop up in the market all the time, and this is also a part of my strategy. Also, when I see setups like this over time, you guys will see other setups that y'all can take instead of just taking support or resistance setups. But I would make a trade something like this. If I see a hold below our bear flag, I would go in for puts or sell position and hold until the next level is reached. As you can see, we went way past below all the way into the bottom of the next zone. But right here was literally a golden setup. I'm mad that I'm not trading today, because this was literally a golden setup. Two things happened here. We closed above a resistance, now turned support line. We closed above the line, and we closed above the downtrend, or AKA the bull flag. We were setting up for a bull flag, so we broke above, held above the bull flag, and held above this resistance, now turned support. This is what I call an A+ setup. A setup where two setups in one are playing out. Even if this line wasn't here, even if this wasn't resistance or support, say this wasn't a level or a line I had marked out, I would still have gotten in a buy position because of the break of this bull flag. But because this is two setups in one, this is what I call an A+ setup. I would have gotten in at the close of this candle, happy to get in too, knowing that I have like a 90% chance of winning this play, and made my price target our resistance line. It made my stop loss below, a little bit below the level we just broken. So if I would have seen a candle close below this level, I would have got out for a small loss. But if I would have gotten a buy position, boom, would have took it all the way up, made money. So let's say we would have taken all three of these trades, and I'm being genuinely honest too. I'm not being biased because I already see where the market ended up going. Right here, I would have literally gotten for a sell position and made this my price target. But also when I got stopped out, I would have got stopped out for my small loss. All three of these trades, I would still be profitable even though I'm 2 for 3. Even if I only say I lost on this trade, and only won on this trade. The win on this trade would make up for both of these small losses and plus more on my account. This is what I like to call risk management, which is a part of trading psychology, which is a whole nother step that you guys are going to get into eventually. When you only put in a percentage of your account in a trade, don't put your whole account in no trade. And when you follow every stop loss and every price target, or just know when to get out, not every price target is going to be hit. Sometimes it's going to be a rocky road on the way there. Sometimes it's going to be a reversal before we even hit the next level, and it's not even going to hit the next level. Sometimes that happens. But over time, you will know when to get out. You will know when to go ahead and cut for the small profits in the middle, because it doesn't look like price action is on your side. Make sure every single stop loss is followed, and that's how you will stay profitable. If you're not profitable right now, but you've been trading for a minute, you have a nice little strategy, you already understand support and resistance, but you're not profitable, you're not using proper risk management. You're putting $100 in the trade one minute, then you're putting $500 in the trade 1 minute, and you're putting $300 in the trade 1 minute, and then this is actually a level right here. But use risk management. If you're trading for the day, use the same amount of capital. This is a trick that nobody told me. I had to learn this on my own. A trick. Use the same amount of capital for every trade you take in one day. The same amount of capital. So if you're putting in 1,000 per trade, do not put 1,500 in the last trade. No, if you use the same amount of capital per trade, around the same average loss. And obviously, as you guys can see with this strategy, you can literally be 4 for 10. You could have a 40% win rate with this strategy, maybe even a 35 if you have really good risk management, and if you have really good patience. You can literally go 30% with this strategy and still end up profitable. As you can see, we're making way more than what we're risking. Just follow every stop loss. Because if you get stopped out, don't sit there mad like, dang, I got stopped out. No, because as you can see right here, we held above another level not too long after you got stopped out. And after we got a hold above this level, you could have went long, making your stop loss a little bit below this level and making your price target the next resistance line. And boom, you would have had another trade if you would have just followed your stop loss. But no, if you didn't follow your stop loss and you were like, bro, it's got to go back down. 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 You just missed out on a whole nother trade where you would have made way more money and made the loss that you just took back, because you didn't want to be patient and because you didn't want to have discipline and follow your stop loss. This is probably the longest video. I can't believe I really can sit here and talk about something this much. I must be like in love with the charts, no cap, because I really just sat here for about an hour and explained this. But I feel like this right here could change somebody's life. This strategy alone right here can change somebody's life. I truly, genuinely believe that. And look at that. I kind of marked the level wrong on the daily. Whole time that support level was right there. And as you can see, because we have rejected here on daily time frames before, as you guys seen earlier, this would have been another great play. Because we know this is such a strong support, we could have gotten a buy position here and just made our price target somewhere up here, halfway in, but made our stop loss a little bit below. And as you guys can see, we wouldn't have really got stopped out. That support and resistance, that's literally all I do to trade. Of course, you guys see me trade with the 20 SMA, the 200 SMA, but those are just confirmation indicators for me. I don't need those. I can literally just go off price action, and because I have been trading support and resistance for so long, I technically don't even need these drawings anymore, because I have been working on my price action trading, and I have learned how to just be able to detect levels. Like right here I see a level, right here I see a level. I don't really have to mark it out no more. I can just see it in my head. I can just go off market structure, and y'all will get to that point. But learn how to mark supply and demand, learn how to mark support and resistance, and you'll be straight. You'll be making consistent money if you use that risk management strategy that I just explained to you. Please do not just use support and resistance and not use that breakout strategy. Please, and follow every stop loss. I remember when I first started trading, every single YouTuber would say it takes about 2 years, 3 years to be profitable, about 1 year. Me, within 8 months, snapped. Once I figured out that all I have to do is follow every stop loss and follow every price target, and the money would just come. It would just come. Some words of encouragement for the end of the video would be keep pushing and keep trying. Keep learning new things. Keep watching videos like this. There's so many more other informational and helpful videos on YouTube that can literally teach you how to make money from home. So why not use that to your advantage? Millions of people who over 100K a year off of trading. So if they can do it, why can't you? The only difference between you and them, they already had put in their hours. They already put in their tears. They already put in that pain. Now they can eat. They can lay back. They can just come in the market, take their money and leave. Right now you're in the learning stage. You take losses, those are seeds. For every seed you plant a tomato seed. You don't just get one tomato. You get 10, 15, depending on what type of tomato seed. So don't look at your losses like L's. Look at them like seeds. You're just planting seeds, and for every loss you take, there's $1,000 more behind it that you're gonna make. So keep trying, don't give up. 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 And have a beautiful day.
I stay moving, I stay rapping with this blicky. I think I dropped syrup on the clip, the shit got sticky. I'm from the west side, this the best side to get wicked. Little bitch, I ain't like my music, now she want a ticket.